So the Federal Reserve is determined to bring a housing reset to the national real estate market, including the Austin market. How do I know that? Because Jerome Powell, the chairman of the Federal Reserve, has told us that, and he elaborated on that in his recent interview last week whenever the Fed raised the Fed funds rate again 75 basis points. So that's the topic of today's video. And let me say hello everybody. I'm Dan Forbes, broker at Forbes Realty, here in the Austin area, specifically covering Leander, Cedar Park, and all the North Austin suburbs like Pflugerville, Round Rock, Georgetown, Liberty Hill. So if that's your area of focus and interest, if you're thinking about moving here to the Austin area, like many people are doing, or maybe you have a home here that you're trying to sell, I want to bring you some great content about what's going on in our market. I get calls and texts and emails almost every single day from buyers, and I absolutely love it. So before you leave my channel, I hope you'll do one thing, that you'll subscribe, hit the bell so that you'll be notified whenever a new video is posted, and that you'll hit that thumbs up button. It helps other people find the channel. But let's talk about the housing market reset in Austin that's going on right now, right after this. So just last week, September 21 of 2022, the Federal Reserve again raised the Fed funds rate by 75 basis points, and their announcement was made during a press conference. And I want to share with you some of the statement of Chairman Jerome Powell, because he is actually in the process of causing a housing market reset. And that's his words, not mine. And that's why we're seeing this correction in the housing market across the nation and also here in Austin. So take a look at the transcript. So he's asked by the CNN reporter, at the end of your June press conference, you mentioned plans to reset the housing market. I was wondering if you could elaborate on what you mean when you say reset, and what do you think it will actually take to get there? And so Powell responds, when I say reset, I'm not looking at a particular specific set of data or anything. What I'm really saying is that we've had a time of a red hot housing market all over the country, where famously houses were selling to the first buyer at 10% above the ask before even seeing the house, that kind of thing. So there was a big imbalance between supply and demand, and housing prices were going up at an unsustainably fast level. So the deceleration in housing prices that we're seeing should help bring that sort of prices more closely in line with rents and other housing market fundamentals, and that's a good thing. For the longer term, what we need is supply and demand to get better aligned so that housing prices go up at a reasonable level, at a reasonable pace, and that people can afford houses again. And I think we probably in the housing market have to go through a correction to get back to that place. There are also longer run issues with the housing market. As you know, where it's difficult to find lots now close enough to cities and things like that. So builders are having a hard time getting zoning and lots and workers and materials and things like that. But from a sort of business cycle standpoint, this difficult correction should put the housing market back into better balance. So there you have it, straight from Jerome Powell, the chairman of the Federal Reserve. To bring inflation down, his intent is to cause a correction in the housing market, and that's exactly what's happening here in Austin and in the housing market across the nation. So it's painful, it's not fun for sellers or buyers right now. And I want to share with you some data from the Austin market that will help you understand what's going on in the Austin market. And then I'm going to share with you my advice to today's buyers and my advice to today's sellers. So let's take a look at that. So take a look at what's happening right now with our listing inventory here in Austin. We had a low of 1,222 listings back in February of 2022, and actually matched February of 2021. And so that was the lowest number of homes for sale that Austin had seen in years. And you can see how this chart points that out. But in August of 2022, we had 9,045 listings. So it's even higher today in September. But we've had then a 640% increase in the number of homes for sale here in our Austin MLS. Now, that's good news for buyers because there are more homes for buyers to look at and they have a lot more choices. And for sellers, you've got to be more competitive with price in order to sell today. So it's not so good news for sellers. So let's take a look at what's going on with the median home price here in our Austin MLS. Take a look at this chart right now. And you'll see how that we reached a peak of 550,000. So the orange line is 2022. We reached that high median home price back in April and May of this year. And in August of this year, we ended up with a median price of 496,000. So that's basically a $54,000 drop in the median home price, the monthly median home price here on our Austin MLS. So that's about a 10% decrease in the median home price this year from April and May to August. And where do we go from here? Does the median price keep going down? Well, we don't know. I don't have a crystal ball, but the Fed is determined to reset the housing market. So I would say it's very likely. And then lastly, as far as our MLS statistics is concerned, take a look at the month supply of inventory on this chart right now. We actually had a low of less than a 2-week supply of inventory back in February of 2022, and it actually matched February of 2021. So what that meant was at the rate that homes were selling, it would take less than 2 weeks to sell all of the listings that were on the market. But take a look at what's going on right now. In August, we had a 2.9 supply, a month supply of inventory, and I'm sure that's probably over a 3-month supply right now. But historically, a 3-month supply of inventory is still a seller's market, but this is just a tremendous increase of supply of homes on the market for our Austin area. And if you take a look at September of 2018, we were also at a 2.9 month supply of inventory. So our 2022 market, September 2022, basically we have the same supply of homes that we had back in 2018, and that was a very positive year for Austin real estate, all things considered. Finally, a part of the reset, the housing reset that the Fed is determined to bring upon us, it affects the interest rates for mortgage loans. So take a look at this chart right now. You can see back in January of this year, for a conventional 30-year mortgage, you could get a rate of about 3 1/4. A matter of fact, I bought a short-term rental property as an investor back in December, and that was the rate that I got, 3 1/4. But rates started going up, especially this year with the increase in the Fed funds rate. And if you take a look at this chart, it shows that the average, and this was back in a couple of weeks ago, September 13th, for the year was 4.82. But our rates are actually higher than that right now. Today's rate is 7.742, but let's take a look at what that means comparing where rates have been historically. Take a look at this chart. So this chart goes back to about 1970, and you could see how interest rates have fluctuated. As a matter of fact, rates got up to, 18%, I guess, back in the early 80s. So if you think about mortgage rates at 18% at today's rate at 7.742, I mean, what kind of mortgage rate would you want to have? Were people still buying homes in the early 80s? Absolutely. Are people buying homes today? Absolutely. In fact, look at the input that I put on this chart. If you look back to November the 10th of 2000, the mortgage rate was 7.79. If you look at the mortgage rate today, the interest rate is 7.742. So yes, we've had an increase in mortgage rates, but comparing where we were in 2000 to today, we're really at the same level. So I hope that puts things in perspective about mortgage rates. Buyers shouldn't get freaked out because we're at a mortgage rate in the sevens right now. But yes, it's quite an adjustment from where we were a few months ago, but that's all in the past now. That's in the rearview mirror, and we're not in that kind of market. So here's my advice to buyers. If you want to buy now, be very selective. Be sure that you are working with a broker like myself that can help you find a home that is not overpriced. And you might even want to wait to see which way prices are going. But if you want to buy now and you need to buy now, be selective. Look for listings that have been on the market for a while and those that have been softened up a bit by the fact that their home hasn't sold and they haven't had very many showings and that they've been going through some price reductions. Also, the strategy of negotiating instead of a $10,000 price reduction, ask the seller to buy down your interest rate with that $10,000, and that's going to give you the most bang for your buck on your mortgage payment. My advice to sellers, hey, we are still in a seller's market. It's not a crazy strong seller's market, but it's still a good seller's market. Don't be greedy. Don't be trying to get that $100,000 over asking price that your neighbor got 4 months ago. Because they were very lucky. It was like going to Las Vegas, and every day there's winners and losers there. Those sellers during the pandemic 2021, they were just lucky to be in a market that gave them the crazy prices that they got. So you're not going to get that now, but it is a seller's market. If you've owned the home for a few years, you're going to do very well. Don't be greedy. Don't overprice it. And be sure that you price your home competitively compared to other homes that are on the market in your neighborhood or in your area. So do me a favor, if you like the content on my channel, before you leave today, be sure to subscribe, hit the bell so that you'll be notified whenever a new video is posted every week. And also smash that thumbs up button. It helps other people find the channel. So what's your experience and what's your thoughts about the housing market now? Where do you think it's going? Leave me a comment. And I'd love to hear what you have to say and what your thoughts are.